RBI గవర్నర్ సంజయ్ మల్హోత్రా పరపతి విధానం గురించి మాట్లాడుతున్నారు. ఇప్పుడు ఆ లైవ్ చూద్దాం.
First of all, I have a few measures in fact, for strengthening the resilience and competitiveness of the Indian banks. The ECL framework, the expected credit line framework of provisioning with prudential floors, is proposed to be made applicable to all scheduled commercial banks and all India financial institutions. You would recall earlier a discussion paper in this regard was issued. We propose to make these effective from 1st April 2027, therefore giving sufficient time to the regulated entities. Moreover, there will be a glide path till 2031, so effectively 5 years. This is to smoothen the one-time impact of higher provisioning, if any, on the existing books of some of the banks. Furthermore, it is proposed to make the revised Basel III capital adequacy norms effective for commercial banks again from 1st April 2027. In furtherance of this, a draft of the standardized approach for credit risk shall be issued shortly. Under the revised approach, the proposed lower risk weights on certain segments are expected to reduce the overall capital requirements, particularly for MSMEs and residential real estate, including home loans. It may be recalled that capital requirements for operational risk have already been finalized in 2023, whereas the capital requirements for market risk under Pillar 1 of the Basel III guidelines are under finalization after receipt of comments from the public. All these measures we propose to make them effective from 1st April 2027. These measures will help align our guidelines with international standards adapted to our national conditions and priorities, and strengthen the capital adequacy framework for the banks and the all India financial institutions. 3. A draft circular on forms of business and prudential regulation for investment was issued in October last year. It has now been finalized after wide public consultations, and it will be issued shortly. The proposed regulatory restriction on overlap in the businesses undertaken by a bank and its group entities is being removed from the final guidelines. The strategic allocation of business streams among various group entities of a bank will be left to the wisdom of the bank boards. It is further proposed, this is my fourth proposal in this regard, to introduce risk-based deposit insurance premium. You are aware that today we are having a flat rate of premium for all banks, irrespective of size, irrespective of risk, at 12 paisa per 100 rupees of net deposits. We propose to bring in risk-based insurance premium. This will incentivize sound risk management by banks and reduce the premium to be paid by the better rated banks. I will now announce 5 measures to improve the flow of credit to the real economy. 1. To expand the scope of capital market lending by banks, it is proposed to provide an enabling framework for Indian banks to finance acquisition by Indian corporates. Some of the acquisition finance related to infrastructure companies is already available, already provided. We propose to now expand it. 2. It is proposed to A. remove the regulatory ceiling on lending against listed debt securities, and B. enhance limits for lending by banks against shares from rupees 20 lakh to rupees 1 crore per person, and for IPO financing from rupees 10 lakh to 25 lakh rupees per person. These had not been revised for some time. 3. It is proposed to withdraw the framework introduced in 2016 that disincentivized lending by banks to specified borrowers, those borrowers which had credit limits from the banking system on the whole of rupees 10,000 crore and above. While the large exposure framework since put in place for the banks addresses credit concentration risk to a particular entity or group at an individual bank level, concentration risk at the banking system level, as and when considered necessary, will be managed through specific macroprudential tools. 4. To reduce the cost of infrastructure financing by NBFCs, it is proposed to reduce the risk weights applicable to lending by NBFCs to operational, high quality infrastructure projects. This should give a boost to funding for infrastructure in the country. 5. Since 2004, about 20 years ago, licensing for UCBs, the urban cooperative banks, had been paused. No license has been given thereafter. Considering the positive developments in the sector, including legislative amendments in the Banking Regulation Act during the last 2 decades, and in response to the growing demand from the stakeholders, we propose to publish a discussion paper on licensing of new UCBs. I now come to measures related to ease of doing business, and we have been taking a number of measures over the recent few months and even earlier. I have 7 announcements to make, including those related to FEMA. First, a large number of circulars and directions totaling about 9,000 have been consolidated. I had earlier announced in this regard, and we have consolidated them subject-wise across 11 different types of regulated entities. Drafts of the same are ready, and they shall be issued shortly for public consultation. They should certainly aid simplification. Second, it is proposed to provide greater flexibility to banks for opening and maintaining transaction accounts of borrowers, that is current accounts, CC and OD accounts. This will particularly help borrowers which are regulated by a